Twitter? Or... Right, okay. I wasn't aware of that last time that we were on Twitter. Right, okay. And is my mic loud enough? Sorry? Right, I've got it turned all the way up. Is it better if I sit a little bit closer? No? All right, okay. The only thing is, we're doing it an hour early today, aren't we? Yeah, sure. Yeah, I get that. Yeah. Are we doing a duck race? We're not doing a duck race today, are we? Okay. I'll message you on Discord. Right, okay. Okay. Right. Welcome, everyone. If you've been to last maybe 4 or 5 webinars that I've held, it's been a lot of it has been based on candlestick anatomy, strategy, entry types, how to enter with zero drawdown. But I thought we've done so much on candlestick anatomy that we'd go through something a little bit different. So what I've done today is I've taken some of the sections out of my GFX Academy trading plan, and I've put them together here to go through maybe around about 50% of what my students get in order to try and grow that person from maybe an inconsistent trader to a more profitable one. And a lot of it starts with managing emotions. So emotions basically override logical thinking. Okay. For example, anger leads to aggressive trading, okay, which we've probably all been in. Regret, okay, where maybe you've missed an entry, kind of like FOMO. That will lead to hesitation, second guessing. Maybe you haven't got your entry type or your entry checklist written down. Anxiety, okay, that can lead to overtrading. Despair, again, lack of motivation. Sometimes maybe things aren't going your way. Um, that can also then that can cause some issues with your trading. Overconfidence, now that's quite a big one. Okay, if you're on a winning streak, it gets sometimes into your mind you can't lose, so you end up over trading, over risking, maybe reducing the size of your stop loss to increase the size of your lots to try and make more money. Okay, these are some of the things that affect the majority of people. So in the academy, we actually tackle all this in the trading plan. Okay, now why do you struggle to overcome losses and setbacks? Okay, emotional toll. Okay, fear of further losses, loss aversion. Okay, fear of losing money, over trading. Again, try and force trades that maybe aren't there. Maybe you've taken a loss, you're trying to recoup your your previous loss. Maybe you're in drawdown. Impatience, which is FOMO, fear of missing out. Okay, has a big impact on people. They'll enter the trade too early, get stopped out, not waiting for their checklist criteria to be checked. Almost like gambling. And then external pressures, which again is a real big one. And a lot of the time, this will happen um, if you're trading full time as a job compared to trading, you know, as a side hustle, or maybe as a bit of a hobby or for an extra bit of money. The external pressures, like what I experienced when I went from full time work to full time trading, were I basically had, I had a secure income. I had my own business. I had a very good income off that. I decided to go full time trading, and then instead of taking um, my profits and compounding my account week on week on week, I then had to take that money out in order to pay my bills. I had to pay my rent. I had to pay my gas and electricity. I had to put food on the table. I pay my car finance. If I go out for food with the wife, all these things, they all add up, and they cause your emotions to run riot. Okay, so what can we do to prevent the impact of these emotions? Okay, well, psychological preparation, okay, something we'll go through in a second. A written trading plan, okay. This for me is the absolute paramount. If you have a plan in your mind, it can be changed and altered and adapted as you go. If it's written down with a series of, for example, an entry criteria, a POI that you use, session times that you trade, all of this has to be basically written down so that you can follow it. Look at it every day. Look at it before you're entering your trade. Okay. A strict risk management plan. Okay. So for me, there are two different types, which I'll go through in this webinar. You've got the overall account risk management, and then you've got the daily risk management plan. Both are supposed to work together because ultimately you've got to manage the whole account, but you've got to manage your daily win and loss, your profit and loss. Okay. Journaling every single trade. Okay. Because if you're not journaling every single trade, how can you review? How can you improve? How can you filter out mistakes? How can you grow as a trader if you're not journaling everything? Okay. Now, the best traders are emotionless to losses. We're aiming for consistency. We're not aiming for home runs. Okay, although home runs do happen, you can also have a plan. For example, there was a gold drop, I think it was earlier on this week when we broke out of that accumulation after the all-time highs. Now, I was in that trade from the drop, and it dropped, I think, that if I'd held it all day, it would have hit about 13, 14 R. Okay, but part of my trading plan is that once I get past 2R, I have to then trail my stop loss to 2R in profit. And a 1 minute candle tagged me out. But I didn't get FOMO. I didn't try and re-enter the trade. I let it do its thing, because sometimes it will hit 2R and it will come back. And, I'm in drawdown. But ultimately, it did keep going. Now, it's not very nice when that happens, but you have to stick to your rules. And that's what will keep you consistently profitable for the long term. Okay. So building discipline. Okay. Now, there is no success without discipline. Okay. That is a quote from Sir Alex Ferguson. I'm a big football fan, and I take a lot of what he's done over the years. And one of the quotes that I've picked up on is, "There's no success without discipline." I've translated that into my trading plan. Okay. So in order to develop discipline, you need patience, consistency, routine, preparation, emotional control, and accountability. Now, all of those seem pretty obvious, okay? But in order to build this, again, it's something that needs to be written into your trading plan, okay? Now, a positive mindset would then lead to rational decisions, which leads to emotional resilience, which will in turn lead to improved confidence, improved decision making, enhanced focus, improved performance, and stress reduction. Okay, so again, part of your trading plan, if you're following a strategic step of rules and guidelines for your trading, all of this basically takes care of it of itself, and it leads to consistent trading performance. Okay, so in order to develop this winning mindset, you need a daily routine which consists of pre-market routine, again, written trading plan, okay, entry checklist, which is something that I often see many people overlook. I don't see there's an awful lot of trade. Yes, you have a written trading plan. Great. This is how I want to analyze the market. This is how I want to enter. This is how I want to take profit. But I don't see many people who have an entry checklist. Now, in one of my previous webinars, I actually provided my entry checklist. I think it may be floating around in the Think Capital Discord. So maybe if you want to grab that, you can head over to the Discord and ask Andre for it or someone. Um, so then we've got account and trade management plan again. Okay, journal and trade. So a journal and a trade report journal. Okay, my students will get the journal. They get the trade report card, and they'll also have an overall journal. So they got the combination of both. We actually have a 30 trade challenge as well, which is designed to filter out mistakes over a 30 trade period. Compounding plan, okay, something that again not many people have, and the reason why I think that's important is because if, for example, you have multiple, let's say 100k accounts, and let's say you get up to 1 million in funding, you can risk less and make more. Okay, so for example, you risk 0.25 over 10 100k accounts. That's 2.5 grand, which ultimately on a 2-hour trade is going to be 5,000. Now, with just the 100k account, you've actually got to risk 2.5% of your account to achieve the same results. So again, compounding plan, and not something that's kind of, if you write it down and you have a strategic approach to achieving um, 1 million in funding, it doesn't have to be done, I mean, overnight. The faster you do it, the faster you lose it. Okay, so if your compounding plan would consist of maybe having one account, 100k challenge account per month, over 10 months you can quite quickly get to 1 million in funding. Okay, and then a weekly review process. Okay, you need to be reviewing your trades weekly, and monthly, and maybe quarterly as well, because if you're journaling and you have trade report cards, you can then, I mean, for example, you can print them all off, put them on the floor, section them into winning trades, losing trades, try and find out what behaviors that you have are causing you to lose money, and try and filter them out. And then on the flip side, whatever's good, what you're doing well, you can try and enhance and focus on that. And maybe, you know, you your written trading plan can be adapted over time. Okay, you have to start with something, and then over time, if you realize that something's not working out so great, you can remove that and replace it with something else. For example, if you're using a 15-minute time frame and you're using a 15-minute candle flip, but the results are not as great as using a 30-minute candle flip entry, then obviously it's something that you need to adapt and change, so you can reduce the losses and hopefully gain more wins over the long term. Okay, so pre-market routine. Okay, this is something that I think is very important. Okay, because every day you get up, okay, your pre-market routine should be pretty similar. I don't know if you want to go to the gym in the morning, or if you want to meditate or anything else like that. But these are some of the things that I basically do, which help me. Okay, so reading your long and short term goals out loud. Now, Okay, you can sit in the kitchen or you can sit in the living room or wherever you have your cup of tea in the morning and read them out loud, or you can at least have a screenshot on your phone where you just remind yourself of what you're doing, all right? Because ultimately, when you wake up in the morning and you look, I trade gold every day and I see gold moving and I'm like, right, I want to jump on that. Okay, why do I want to jump on that? Well, because it's moving impulsively. But is it in line with my trading plan? Is it in line with my checklist? Is it in line with my long and short term goals? If I wait, is it going to potentially flip on me and take me out? Okay, so reading your short and long term goals out loud is important. Read your trading plan, okay? Read your entry checklist, okay? And then open, I would say, 3 to 5 previous trade setups. Um, and if you've done this properly, you should have some very similar looking setups in your journal or in a folder on your computer where you can study the entry prior to or whilst you're waiting for the setup to occur. Okay. I've got a room on my Discord full of 5 minute candles, which I'm ultimately going to be adding 15 minute and 30 minute to also. But all my students have access to these screenshots. There must be about 3 months of screenshots in there, and yeah, just open it up, flick through the last 5, flick through the first 5. And what you're trying to do is you're trying to build this consistency of entry type and build almost like you want to see the trade and you want to be able to take it there and then without thinking about it. Where if you're studying it and you're getting that imprint in your mind, this is what happened last time. It went to a stop loss. This is what happened on this entry. It went straight to take profit in 4 minutes. Okay, so again, studying your previous setups first thing in the morning. You can have them open on your screen. You can print them out and stick them to your wall or whatever it is you want to do. Just make sure you're reminding yourself of what you're looking for. Okay. So for me, I'm normally up about 6 a.m. in the morning. I'm not allowed to look at the chart until 7 a.m. Okay. I don't want to be looking at the chart as soon as I wake up. I'm still quite, generally, I'm still quite tired. I go downstairs, have a coffee with my wife. I've got BBC News on. I'm allowed then to analyze the market from 7 a.m. till 8 a.m. I'm not allowed to enter until London or after London open because, mainly because I see Frankfurt very often move in one direction and London either come and take the high or the low of Frankfurt and then go in my favor. Or like this morning, I see Frankfurt move down on gold and then London move up and completely take the highs and just sit there happily above the Frankfurt above the Frankfurt high with not real much with not much intent to moving back in my favor. So specifically outline what you want to see in order to enter. Now, this goes back to opening the 5 previous trade setups, or maybe there's a few more. Maybe there's some from last month. Maybe it's your favorite entries. Visualize then what it is you want to see in order to enter. So when it happens, you don't have to second guess. You want to visualize your daily profit target and prepare to set your take profit at 2R. Now, I say 2R. Someone else might have a 1R strategy, 1.5R strategy. Maybe it's a 3R strategy. Visualize yourself taking profit at that level. Okay. Because if you visualize yourself taking that profit, when it happens, you just do it automatically. You're almost on autopilot, right? Now, you also want to be visualizing yourself accepting a loss with zero emotions. So basically, if you take a loss, imagine or visualize yourself shutting your laptop, putting your phone on one side. Maybe you go and take a shower. Maybe you take the dog for a walk. Maybe you go cut the grass. Visualize yourself doing something after that loss so that you immediately do it. It's almost like it's part of your trading plan, right? Take the loss, go and do the dishes. Take the loss, go and have a cup of tea. Take the loss, take the dog for a walk, right? Imagine yourself doing it so that when it happens, it's almost like you're on autopilot, okay? So plan to walk away if you take a loss until the next session. Try not to take 2 or 3 entries in the London session, right? Because sometimes the London session doesn't want to do anything. London session may just move up to an area of liquidity and sit there and not move. It may maybe give you 3 or 4 potential, like it did today. It will give you 3 or 4 potential short ideas, but each and every single time it goes into profit, flips straight back into drawdown. Okay, so again, plan to walk away until the next session. You got a couple of hours normally in between. Go away, come back, fresh mind, and look for this different type of setup, or maybe just walk away for the whole day. So failing to prepare is the same as preparing to fail, and I think that is something that really should stick in a lot of people's minds. If you're not prepared, then you are basically prepared to fail, because you need to prepare and outline what it is you want to do with your trading that day. Okay. Now then, pre-market analysis. Okay, so this is basically what I look for. Okay, so I keep my analysis simple. I'm basically looking for 1 hour structure, high, 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 low, 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 lower, high, using a line chart if required, but mainly using the 1 hour structure. Okay, for me on the intraday, especially 1 hour structure is like God. I use daily levels. I use fair value gaps, 1 hour. Okay, and 15-minute. I know it says 4 hour here, but I generally use 1 hour and 15-minute fair value gaps. I'll also say that the first fair value gap of the day or the session is normally the one that holds. Okay, which is the next part here. So those are highly important for me. The first fair value gap of the day, whether it be a 1 hour or 15-minute, coming into the next session or using it in that session. So for example, if Frankfurt leaves behind a fair value gap on a 15-minute time frame, if London comes back in and shows me that it wants to move away based on my entry criteria at that fair value gap, then I will be entering on that fair value gap because it's the first of the session or first of my trading time. Okay, so the more fair value gaps in the same area, obviously the higher probability. And what I mean by that is basically there could be an impulsive move on the 1 hour that also leaves behind a 30-minute and also a 15-minute fair value gap at the same place, which is quite common. If you can build up this strength behind the area, you're building more logic also. Okay, you can refine the 1 hour down to the 15-minute, but I won't go normally lower than the 15-minute time frame for fair value gaps. So you also want to consider any supporting factors. For example, a key level, Asia high, Asia low, a manipulation point, which is part of an old strategy that I have for the GFX, a fib level. These are not compulsory. I'll also add to that daily levels. For me, on gold, daily levels, support and resistance are probably the strongest areas on the gold chart to trade from. So if you add these supporting factors, maybe you use a 200 EMA, maybe use a VWAP, maybe use something similar. Just try and build logic behind the trade, the area, the strength behind it. Try and combine all these confluences together. Okay. Now mark out possible targets. Okay, that's also important, because if you're getting in here, where are you getting out? Okay. Previous session high or low, previous day high or low, monthly high or low, or the next fair value gap in the direction of your trade, because we all know people are using fair value gaps to trade from. Fair value gaps normally bounce. So if you trying to trade through a fair value gap, sometimes it maybe doesn't go in your favor and you end up coming back to break even, or maybe you get a loss out of it. Each session will usually be bullish or bearish. Okay. You try to maintain that bias for either the whole day or for the whole session, and that should also help you along the way. So I use the 1 hour time frame for daily bias. That's basically it. 1 hour time frame, 1 hour structure, high highs, high lows, lower lows, lower highs. Okay, now then, account risk management plan. Okay, so generally speaking, this is very similar to my daily risk management plan, and it all obviously starts and revolves around the initial balance. Okay, so initial balance is I would risk 1% per trade. Some people will prefer to risk 0.5% per trade, take the first win hopefully, and then at 1% account balance risk 1% from there. It all depends on your your personality and how you like to trade, how confident you are with your system. I'd always say that the first trade on an account, you need to wait patiently for an A+ setup, because if you get that first win and it's a 2-hour win, you're now 2% away from initial balance. So even if you lost the next trade, it's not too much bother, you're still in profit. Okay, so on the left, okay, challenge account. If you have 4 wins at 2R, that generally passes the majority of phase ones. Now, that doesn't mean to say you're going to get 4 2R wins in a row, but ultimately it only takes four wins as a rule to get to 8%. Okay, phase 2, you only need 2.5 wins to pass phase 2. So if you put it like that, it looks fairly obvious and easy to be able to hit 6.5 wins in a row. Generally doesn't happen. But if you're in profit, then obviously 1 step back, 2 steps forward with a 2R strategy. If you take a hit, then ultimately the next trade should, put you back in the profit, or it takes away half the loss. On a funded account, 1 2R win, stop and wait for the payout, or maybe you just want to try and get to maybe 2% per account, wait for the payout. If you took a loss, then obviously we're going backwards. So if you lose 1%, okay, you drop your risk to 0.75, and hopefully on the next trade you get a 2R win, which would then put your account 0.5% in profit. Okay, if you took 5 losses in a row, that's going to take you to -5. Okay, or if you if you get, because you're now risking 0.75, so it would take a few more than 5 losses. Okay, but once you get to 0.5% in drawdown, you need then to drop your risk to 0.5%. Okay, and then you need to slowly get yourself away from that 5% drawdown. And as you get closer to the so maybe let's say you get to 2.5% in drawdown, then you could go back to 0.75% risk. Okay, so this is my daily risk plan. Okay, so again, you've got the initial balance. Okay, so start at the initial balance. If you are in drawdown, then you need to revert back to the account risk management plan, because your initial balance for the day may be in drawdown, in which case you won't be risking 1% per trade. You'll actually be risking 0.75% or 0.5%, or depending where you are. But for the process of this webinar, we start with the initial balance. Okay, so if we're at the initial balance, we risk 1% per trade. If you take a win, you stop trading. That's it. Okay, you stop trading. You've got 2% on your account. You walk away, go about and do your thing. Again, go walk the dog, go to the gym, I don't know, go out for some food, go for some lunch. Find something else to do with your day, because you've taken a win. If you take another trade, potentially you have higher there's higher percentage of, if you took a loss, it's going to affect you emotionally, and you're going to want to recoup that loss, even if it's only 1%. If you take another trade in the next session, you take a 1% loss, you're now looking at it as in, I was up 2%, now I'm only at 1%, and your mindset will try to push you back into the market to regain that loss, because ultimately it's still a loss. Okay, so if you win 2R, stop trading, get the hell out of there. Right, if you lose the first trade of the day, again, go back to the previous plan and go do something. Get away from your computer, your phone, your trading system. Get away from it until the next session. Okay, now the next session on a daily risk management plan is a little bit different, right? Because it kind of counteracts what's happening on the overall account management plan. Bear with me a sec. Apologies, the postman is just dropping off some letters and my dog's going mad. All right, so if you take a loss, no trade until the next session. Okay, that's vitally important. So give yourself a bit of breathing space in between. You don't want to be taking 2 or 3 losses in London session and then maybe do the same because your emotions kick in again in New York session. Just don't trade. Take the loss, walk away, do something else, come back fresh minded. And maybe if you see an A plus setup, you want to take another trade in New York Stock Exchange. Drop your um, drop your risk on that trade to 0.5. I know you started off risking 1% for the day. Maybe you're still up overall, but the idea here, if you risk half and still aim for a 2 hour trade, the aim here is to break even the day. The aim, once you've taken a loss, is not to make money anymore. You don't, maybe it is, right? Overall, but if you can get to 2R, you've covered your loss, your day is at break even. It's a positive in its own right, not as positive as taking a win on your first trade, obviously, but it stops the rot. Okay. And what I mean by stopping the rot is if you took a loss in New York session, okay, or if you took a loss in London session, 1%, you took another loss in New York session, 1%. The next day, when you come to the charts, you're now minus 2%. Okay. So if you took a trade at 1%, you're only covering the previous day's losses at that 2 hour. So you've worked now for 2 days and you haven't got any money. You've written off the 2 days at break even, right? Now, if you take one loss, 1%, and then you take a second loss in a day, you seriously need to be stop trading after 2 losses in a day, right? Charts are not in your favor. Your strategy's not working that day. Just walk away. But if you've risked 1% on the first trade and 0.5% on the second trade, your now max drawdown for the day is 1.5. So if you come into work the next day and you take one trade and you get a win, you're now 0.5% up over the 2 days. Okay. Which again, on your mindset, is now you've made money over 2 days, and on a 100K account is 500 quid, it's $250 a day, right? Again, it's not the most handsome looking paycheck for 2 days work. It's certainly not as nice as a 2 hour win and a 2 hour win, but ultimately over 2 days you're in profit. We again, it affects your mindset. The human mind is programmed to go to work, get paid, right? So sometimes you have to accept that you're going to have a loss, maybe on a Tuesday, come in the next day, and you're 1.5% down. It's a lot healthier on your emotions than being 2% down and then trying to get that 2 hour win and then trying to hold past that 2 hour win to try and make money for the 2 day period. So again, it's something that stops the rot, and that's what I mean by stopping the rot. It's try to, when you take a loss, you need to slow it down, slow the loss down until you get that win. Okay, next slide. Trading times. So trading times are not only trading times, but trading times and timing are critical to success. Okay, each session will have its own plan. London, Frankfurt, New York, Asia, they all have maybe the same plan, which is where you see these huge moves. Sometimes they have a different plan. Sometimes Asia wants to drop price to the fishes. London wants to pull back, so basically wants to buy some more gold to sell later on in the New York session. So each basic session will have its own ideas what they want to do that day. Now, once you've got your bias for that session, maybe for the day, do not change it until the next session or the next day. Stick to it. Okay. I'm not the best when it comes to changing bias throughout the day. I'm not someone who can go long and then go short. I tend to wake up, look at the charts, I have my plan, and that's it. Sometimes that doesn't help me, but for me, each session generally will have its own ideas what it wants to do. Okay, so in order to get in and out of the market efficiently, we need to trade in high volume periods, which would be Asia. Obviously, I don't trade Asia because I'm sleeping, but I would say the times I have traded Asia, you see the volume kick in about 1 a.m., 2 a.m., and it will run through till about 5, 6 a.m. and sometimes at 6 a.m. you can get some impulsive moves. Normally they can be quite aggressive pullbacks when you're trading gold. Right. The European session starts at 7 a.m. UK time. That's 1 hour before London, which opens at 8. Now, I do not trade Frankfurt. I used to, but based on my journaling, it was affecting my profit and loss more than it should. And then in turn, it was affecting my emotions because I would be getting ready for London and I'd already had taken a loss sometimes, or I'd be in profit and then London would come and hit me out of break even. And sometimes you just can't, break even sometimes first thing in the morning is not the best thing. So I don't recommend trading Frankfurt. London Open will sometimes come and take the high or the low. Sometimes London Open just follows through, which is great, but you can't sit there and say categorically this is going to happen 9 times out of 10, because it's more like 8, 9 times out of 10 London's coming to take the Frankfurt high or pulling back to break even. So my preferred trading time is 8 a.m. to 10:30, 11ish. I tend not to like entering after 11, not too much, although there have been some nice moves on gold around about 11, 12 o'clock. Pre-New York will be, for me, around 12 noon UK time. And then New York Stock Exchange will open. Um, so New York at 1 roughly, and then New York Stock Exchange 2:30. Okay, 2:33 p.m. for me is where the big moves happen on gold. That's where these monster 100 pip, 200 pip moves come from generally over the last couple of weeks. So if you can sit on your hands, or not get yourself into too much trouble in in London, then obviously the next session, and sometimes for the majority of people, the New York Stock Exchange sessions, that's the one to trade. um, Trading either session is fine. You'll see the bigger moves. Obviously, sometimes you'll see New York Stock Exchange will come and take the highs of every session and then drop to the fishes at the bottom of the ocean, or vice versa, start buying. But again, you'll also get a lot of news around about 1:30 UK time. So if you can sit in your hands through that, you can pick up the pieces then to 2:30. Session change rule is something that I don't see many people having. This is something that I implemented back in 2020, maybe 2021. And the rule was basically this: if I'm in a trade, and it's a 2 hour trade always, if I'm in a trade at London and I'm coming to session changeover, I have three options. If I'm in drawdown, my rule was to close and exit the trade at New York Open, whether it's in drawdown or not. Just close it. If it was 0.5, 0.2, 0.6, 0.7, or if it was around break even, just close the trade, because you'll see these impulsive spikes, especially on gold, that will sometimes come and take you out and then go in your favor. So I just like to close it, right? That's if I'm in drawdown. Now, the flip of that would be if I was in profit. So my rule would be, if I'm in profit at New York Open, close the trade just where it is, just close it and bank the profit and move on. Wait for the next setup with a little bit of profit, or move to break even. And again, fingers crossed, really, we're on the session change, because anything can happen on the open. So you either want to be in or out of the trade or break even, basically. So this rule is in place to prevent your trades from being manipulated, which happens. Sometimes it doesn't. Sometimes it goes in your favor, but it's flip of a coin. Sometimes you don't know what the session is going to do before it's open. You can always re-enter trades if your setup is still there. What I'm trying to do is just save myself the emotional toll that it can put on your trade, um, by being manipulated, basically. Okay. And that is that. Okay, so there's much more to this trading plan. There's probably another 5 or 6 pages. However, I'm holding that reserved because this is ultimately going to go out on YouTube. I can't give too much of my academy graduates, my academy students, material away. So that's the basis of my trading plan, my trading times. If you enjoyed this, we're going to do a Q&A at the end. I'm just going to give Andre a quick message. and then we'll do some Q&A. Can you hear me? I can't see the chat. Let me have a look here. Right, we've got a lot of questions in here. Start from the top. Jeez. Right. Okay. Right. Q&A, guys. So I thought I was late. No, you made it on time. Good morning. Good morning. Good morning. Hi, everyone. We've got a lot of people in here today. I'm hoping. Man, you know discipline. Yeah. You can say that again. I don't know what's going on. What's the compounding plan? Right, that's reserved for my VIP accounts, where basically you can do it multiple ways. Um, I would try to focus one trade at a time, but one account at a time. You can do it either by rotating accounts, adding to a trade copier. There's multiple ways you can do it, but I, for example, say you can stack these accounts. You can get phase one done and then add another account, which would be on phase. So one account on phase one, one account on phase two, and ultimately, as one passes phase two goes to funded, the next account should become phase two, and then you can also you can add another account. But for me, one account at a time is, I think, sensible approach would be one account a month. Um, I think that gives you plenty of time that you don't have to rush. You take 2 3 weeks, 2 weeks over the phase one, and then you slow down a bit more because you really want to make sure that you pass phase two. You can either take a week and a half, 2 weeks, but aim for somewhere between maybe 4 to 6 weeks. So much value here. Thank you very much. Um, I'm patient. It's been 2 weeks now since I got into a trade as my setup came, but price didn't pull back. Okay, so maybe Fabi, you need to look at your trading system. Unless you're a swing trader, um, one trade in 2 weeks is not a lot of trades. I had that issue, and I had to adapt my trading strategy because you know what? Sometimes price doesn't do what you want it to do, and you can sit in your hands week on week on week. But ultimately, if you're going to do this full time, you're going to probably want more than one trade every 2 weeks. Um, Trying to look for the next question. On a funded, there's a lot of questions here. On a funded account, if you lose a trade, you wait for the next day. That's not what I said. You can take a trade in the next session, but you reduce your risk to 0.5%. You can also do it on the flip side. You could do a trade 0.5% in the morning in London session. And if you take a win, well, okay, you're 1% up, but you could also then take a 1% trade. I preferred to, because I trade London session mainly. I take my trade and hopefully I can get a 2 hour trade in London, which means I don't have to trade for the rest of the day. I can do what I want. But if if you take a loss in London, I would try to reduce your risk. If not to zero point 0.5 to 0.75, because what you're trying to do is you stop the rot. You don't want to wake up the next day 2% down and then have to try and find a 3 hour trade, which don't come around very often. If I'm perfectly honest, people say they trade a one to three strategy. That TP doesn't come as often as a 2 hour does. So you ultimately want to be trying to just balance out. And like I said in the previous slide, if you've taken a 1% loss and then a 0.5% loss, the next day you come in and you back to risking 1% again, you can actually be 0.5% up for the 2 day period, as opposed to 2 hour down, 2 hour up, 2 days of break even. It doesn't make sense for me in profit and loss. So think capital is the best. They certainly are, my friend. Best spreads I've ever seen, anyway. CPI dropping soon. Good luck to anyone who trades that. My advice is not to. Risk management is necessary factor. Is paramount. Risk management is paramount. Stay committed to your strategy. Yeah, again, don't strategy hop. Let your strategy play out. If you've back tested it, you've put the time and the effort into back testing it. You need to let the numbers play out, because over the long term, you're not looking 10 trades. It's 100 trades to 1,000 trades over the long term. The numbers with a, even with a 55% or 50% win rate, if you use a compound calculator, which are available on the internet, you're going to see huge results. Um, yes, you should be calm when losing a trade, which is why in the start of this webinar, I sorry, trust in your trade. They can't hear you, no. I'm talking to myself again. Sorry, I've got Andre in the background talking to me as well, so you can do, yeah. Right, just looking for the next question, guys. Um, Yeah, you must be careful when winning trades continuously. I fully agree with that. Um, you can get into a position where you're overconfident, and not only that, ultimately, if you're on a winning streak of 4 or 5 trades, the next loss is around the corner. So another thing that you can do in this period is say to yourself, if I've won 3 in a row, I am now only risking 0.5% until I lose. And then once that loss occurs, you can then maybe start to up your risk a little bit again. If you're on a funded account, I don't recommend just trading that account day by day by day by day, because ultimately um, you want to secure the payout. I've just registered my payout today, 3.6% with Think Capital. So I'm waiting for that to drop hopefully early next week.
Yeah,
Um,
it will come next week. That's for sure.
that's
Yo,
for
Greg,
sure.
I'm here. Guys, can you hear me? Let's see the chat if they can hear me.
I'm way up in the chat. I'm still reading through these questions.
So just a random share regarding the question earlier about trusting your trades. If you don't trust your trades or your trading plan, for sure you'll get scared and probably take out your position early. Most likely it will be a loss, and it will take effect in
Mm,
your psychology wise, where
yeah,
where you think that you're not doing good for the week, or probably you can't take another trade for the week because you doubted yourself, and
yeah,
that's something that you need to ensure that you always follow your trading plan.
yeah, yeah.
Yo, they can hear me.
That's it. I mean, ultimately, my entry system. A lot of people suffer with the drawdown of a trade. It's not nice, which is why I've devised this entry method that, generally speaking, will go straight into profit. It doesn't happen every time, but I like to see profit on the screen. So my entry style is I'm not like, I don't have a limit order. I don't enter on a pullback. I tend to enter when price is moving in my favor. And if you follow the wick anatomy and everything else that I teach in previous sessions, that can go in your favor very quickly. So I had a trade this week actually on gold. Used a 5 minute time frame. We had a bitch candle, 5 minute time frame, and in less than 15 minutes hit my 2 RTP. I was out, was done. Really nice trade. Am I a swing trader or a scalper? I'm a day trader. So generally I'll use 5, 15, 30 minute entry methods. But I'm in and out pretty quick. I don't like to hold trades too long. Um, what pair or pairs do you recommend to trade for your first funded challenge? Um, I would. I trade gold. I like to trade gold. It's taken me years to get to this level where I can trade gold confidently. built a strategy, built a risk plan. I've understood that a lot of people would get wicked out, so I started to focus more on the wicks than the candle bodies, and that has worked really well in my favor and my students' favor. You've got to pick what pair you like best. I would generally say try to pick a pair that moves in that session. So, gold generally moves all sessions, but if you're trading the EU, you want to trade that in London or New York. You don't want to be trading EU too much in the Asian session, for example. So yeah, pick whatever pair, maybe pick three. Um, but yeah, you can trade any pair with any strategy. Just focus on something that you and try to get the characteristics of it. So I'll have gold. I'll understand gold, and when I move to indices, they move similar, but I'm less confident trading indices than I am trading gold because I'll see gold do this and then do that, and then I'll have an imprint in my mind, and I'll have a trade that I've taken before, and I know what happens next. Generally speaking, um, close trades win small profit and waiting when it's in a loss. Um, Yeah, that's an issue. You need to have more confidence in your plan. Maybe do some more back testing, do some more demo trading, and get these numbers um, so that you can look at them and study them and work out what works and what doesn't. Because if you're closing on a small loss, sorry, you're closing in a small win, and you're waiting for you're trading with a lot of hope there, I think, and you should be holding the trade in profit and closing it in small loss. You should be doing the opposite. Um, can I risk 2% per trade? I wouldn't on a funded account or a funded challenge,
One
personally.
percent is the best. One
What?
percent is the best
Yeah, one
risk.
percent. 1% is key. Yeah, it's just enough, and it's not too big, not too small. You can have good results with 1%. Um, my my preference usually is the first. It's always the first trade on a funded account is to try and get away from that initial balance because drawdown has a negative impact on your emotions and your confidence. So try even if you just risk zero point 0.5 on the first one, try to get 1% away from initial balance. That's a good strategy. Um,
Actually, yeah, if you went away from your drawdown, if or you gain profits, you're more of a confident. You have confidence with yourself. Where
yeah, you
okay,
yeah.
I can risk 0.5 on the next trade, I guess, but uh, knowing that you profit something and probably can withdraw for the by the next 14 days, it's actually pretty much good.
Exactly.
With the
Yeah.
psychology, with how to
Yeah.
conquer fear, not good. I'm actually in the bottom of the chat reading.
I think I've just got to the bottom also. How to conquer fear. Journaling, journaling and reviewing. Review your trades. If you're fearing the market, it's because you're not getting great results, obviously. So you're only going to combat fear by journaling. And if you're not journaling, then you need to. You can use whatever it is that you want um, to journal, whether you just take a screenshot with writing on it and put it in a folder, or whether you use like an online trading journal, or whether you have a scrap piece or a book. I used to do it in a book. So I had my strategy guide, um, my trading plan. Okay, that was printed out, and I had a diary, and I'd just go page to page, day to day, and I'd write in the entry method what price the manipulation point was at because it was a manipulation point strategy. Where my stop loss was, where it was long, where it was short, what was the results, why did I close? I wrote it all down, and sometimes I'd find myself looking in this book whilst I was looking to enter a trade, saying, "This is what happened at this time of day on this day of the week. And this was the result. What was the confirmation? Where did the candle close in relation to it being a confirmation?" And it just gave me confidence to be able to take the trade time and time again, or sometimes avoid the trade. So risking 1.5%, I'd get away from the initial balance before you do that. And I would only do it also on a challenge just to try and speed up the process. If you got the 3% and you risk 1.5, you're only coming back by half. So you can go back to 1% again. And then when you get to, you know, if you're at 1.5%, get a to our win, then you back to 3.5%. You can then go back to risk in 1.5%. So it's all basic, simple maths in order to get past the challenge. I'm more aggressive with a challenge than I am with a funded account, generally speaking. Um, so yeah, that would be the answer to that question. Okay.
Yo, since you were talking about journaling earlier, Greg, do you include drawings or somehow you just screenshot
I use
trading
TradeZeller,
view?
so it's all there for me. If I click on the trade, it comes up with a chart, um, and then you can add your playbook, you can add your entry confirmations, and you can go through them bit by bit. And yeah, you can just do it quite quickly. But I like the calendar as well. It's profit and loss calendar. It shows you red days and your green days, and then you can quickly analyze, what are profitable days, what are not so profitable, and you can, if you go on tilt, you can quickly identify that. But yeah, it's TradeZella is really great. If I'm perfectly honest, I've personally got um, uh, an Excel document spreadsheet that I give to my students, and that will have it's got a section to enter the trading view link, so you can have that link there all the time. But I also have a, a daily report card, or it's a trade report card. So it has all of the entry criteria as a checklist. That then in turn will give a star grade for the setup. So, for example, if you've got three of the entry criteria checked, it's a 3 star. If you've got five, it's a 5 star. There's 7 entry confirmations that I look out for altogether. If you've got seven, I'm not sure if you can actually get all seven, but if you've got
Probably not. Yeah, probably not.
if you got 5 stars on your entry checklist, just get in the trade. Don't think about it too much. Get in the trade because it's got five confirmations. If it's two, if it's one, probably avoid it. If it's two, three, maybe lower your risk. If it's four, five, four, get in the trade. Use your normal risk. If it's five, just get in, and it should do its thing. Um, it then has a section on, like, for the report card, it will say how to manage the trade, where to take profit, what's your risk off plan, when are you moving to risk off, what is your plan for that? Okay, and then did you follow it? And then grade out of 5 stars. How did you manage your trade? And then it's got some notes at the bottom and some other things. How can you improve? What should you do? And then again, it's got an image. You can put an image to it, and that's my students get that as well. Um, so yeah,
Yeah, pretty much simplified to be honest. You just check
keep
with the
everything as
checklist.
simple as possible. Yeah, for
Yeah, of
sure.
course. That's the best thing to do in trading.
But this is why I don't. I used to use 4 hour levels, but if you say, for example, on Think Capital gold chart, the 4 hour starts at 10 p.m. Um, every 4 hours. But if you use Forexcom, the 4 hour opens at 11, which is when gold officially opens at 11, because nothing happens between 10 and 11. So you've got two different variations of a 4 hour chart, where the 4 hour chart will give it gives supply and demand, but it gives support and resistance at different levels on the 4 hour, based on the two different candle opening times. So I'm thinking to myself, well, how do I get around this problem? I just won't use the 4 hour. So I use the daily, which has got better structure, because the daily opens and the daily closes at the same time, day in, day out. But then on the 1 hour, it's the same. Every hour is an hour. But the 4 hour, I try to avoid it unless, yeah, I absolutely have to. Um, but yeah, for me, it's the 1 hour and the daily. Um, so, right.
Yo, higher end regarding higher time frame, I personally think it's better accuracy. How about you, Greg? Since you
Oh, much
discussed
better.
that
Yeah,
that the
sure.
daily is better in looking instead of 4 hours.
Yeah, you need to have higher time frame. You need to be backed by the higher time frame, and if you're entering on the lower time frame, I'd say you still need to have. For me, on gold, the 30 minute is probably the best for both. You can analyze both and enter on both without having stop losses too big or too small. So on average on a 30-minute time frame, you get anywhere between 30 to 50 pips on a good day as a stop loss. That to me is pretty neat and tidy. Going up the time frame, of course, you can get higher stop losses, but you have to hold your trade a lot longer. So you kind of intraday swing, and then going too low down, especially with gold, you can get unstuck pretty quick. I mean, you it's one 5 minute candle that turns out to be a bitch candle, and you don't know it's coming, but you're out of the trade before you know it. But then again, on the flip side, you can be at take profit in 4 minutes. So I would say, especially if you're new to gold, I would try to hover around the 30-minute for entries, the 1 hour for structure, and have a you know a full hour if you want, and a daily level selection. So you wouldn't need to go drop lower than a 30-minute time frame, and you can have a lot of success using that time frame. So right, do we have any more questions?
I think
One
it's
problem.
pretty much repeating questions already.
Yeah.
Uh,
Well,
Guys, so for everyone who joined this live session, sorry, Greg, for cutting you off.
that's fine.
uh, I'll be just collecting data, so give me 10 to 15 minutes. Hop
Yeah.
onto trading desk and Discord, and we will do the giveaway.
All right. Yeah. Well, so we're signing off now, right?
Yeah, in a bit. Wait, Vicky has a question. So, which type of trader are you since you're here? So, I'm a day trader, which majors in forex. I have four pairs, so AU, EU, GU, and UJ. Nine scalper. So most of my trades are being held for about 4 to 6 hours. TPs are around 150, SLs 50 pips usually. But I'm not the host here. So, yo, Greg, if you're going to teach me about gold right now, because if I'm going to trade gold, I just use simple support and resistance. And imagine that I'm just a beginner trader. What will
Right.
be the
Right.
best
So,
thing that I will do?
okay. So the most important thing for me on gold is to have that higher time frame picture. Okay. So the daily levels. Once you start marking the daily levels, support and resistance, you only need to mark them with a horizontal line. You don't need big boxes everywhere all over
Yeah,
your screen.
horizontal line is only I do.
The daily levels for me are incredible. And what will happen is you'll see time and time and time again, gold will move from one daily to the next daily, either in a day or over a 2 to 3 day period if it's a big gap. So if it's moving from one daily to the next, you can use those obviously in confluence with a fair value gap or an Asian low or Asian high or something similar, and try to trade from one to the next, because it will basically bounce from one to the next to the next to the next. Um, you can also short term trade it against the trend off of a daily level. Maybe
No, I learned so bad about that.
that's
Don't
for more
trade.
advanced trading.
Yeah, I usually lose trades like 70% of the time. If I counter trend, it's a for sure lose for me. I can't.
I missed one yesterday. I looked at it as a 5 minute entry. By the time I tried to put the numbers into my phone, it had done 100 pips virtually, and I was taking and then I was just looking at it. But they hold the most liquidity. Sometimes they bounce, and
Yeah,
if you're in the zone, you can get some amazing results. But yeah, daily to daily, take your time. Try to have in mind 1 hour and 15-minute fair value gaps, 1 hour structure, and try not to enter lower than the 30-minute time frame until you have more experience, but still use the anatomy of the candles on the 30-minute and the 1 hour to confirm your trades, as I've gone through so many times in previous
yeah,
sessions.
the V
The
structure.
V shapes on the higher time frame, 1 hour, 30-minute, for me, 1 hour and 30-minute are pure gold on gold. You can enter on a lower time frame. It sometimes can give you a better risk to reward, but you don't need to, because gold will move to R. It will move to R, no problem. So you can quite quickly get in and out of the market on the just just need to time it right, because it will manipulate quite a lot. But once you're in and you've got that, the anatomy of the candle and the structure of the wicks all imprinted and all in your favor, it's just a matter of entering the trade at the right time of day, because it will sometimes just go sideways. Um, so again, London session, New York session, New York Stock Exchange, and that's it. Try to have maybe 2 to 3 hour windows throughout the day. Okay.
Okay, we can leave. Thanks, Greg, for that. And just comment about the time zone. So yeah, most profitable for me, I guess, right now is during London session.
Yeah, London's not been great for me so much with gold, but yeah, the big moves are coming in New York at the minute for the last week and a half. But yeah, it flips between sessions, and it sometimes London they've got a lot of work to do in terms of trading gold, and then sometimes New York not so much. So you just got to try and go with it and manage your risk and manage your account.
I got 100K actually, but I won't tell which firm or if I'm trading with Think Capital. That's a secret. Okay, guys. So I'm sorry again, Greg, for cutting this. We will do a live session in Discord instead. We will do a duck race. So I'll just get all of the participants both in both in Twitter and in YouTube. So just hop in the trading desk around 10-15 minutes.
Hi guys, I just want to say a little bit different from me, as you're not used to this. You're normally used to a lot of candlestick anatomy, etc. Thank you all for coming. I hope you've taken great value out of this, actually, because it is a bit different. And yeah, we look forward to the next one.
Yeah, guys, we still have Greg. I'll have further announcements soon, and we will have probably a interview which Greg will be talking to one of our current highest payouts ever. We're
Highest,
just
highest,
finalizing a schedule.
highest payout, I think.
Yeah, he's
If
actually the highest right now. Last one was 32K if I remember. No, 28 or 32. Either of
best
the amounts.
best one I got was 24K off FTMO back in
That's
2021.
already big.
That's really big, yeah. But then the rest of the account didn't go so well. I was risking too much. I got the payout, but yeah,
That's all that matters. You got the payout.
I got the payout. Yeah, yeah. Swings and roundabouts.
Okay. Uh, any closing remarks for you, Greg? Because we will be stopping the lives in a bit.
That's it for me. Thank you very much for coming. As I said, it's something a little bit different from me to what you used to. I thought I needed to mix it up a bit because I was talking about the same thing over and over again. So yeah, hope you enjoyed, and I hope you took some value out of it, and I hope you implement it into your long-term success with Think Capital.
Okay, guys, we will be closing this live session in 3, 2, 1. Have a great weekend, everyone. Okay, the live session is done. I just have a question before